HIRE Act was an act that would give tax credits back to businesses for hiring. So it would stimulate some of the economy in the U.S. by hiring more employees, and they would get tax credits. Well, in order to be able to pay those tax credits, the flip side of the bill was FATCA, which is the Financial Accounting Reporting Agreement that has now forcing the offshore financial banks to either comply with the U.S. regulations or decide not to comply. And that's where they're going to withhold a percentage of some of the monies and some of the wires that go through U.S. banks and either come down to the Caribbean or go to other parts of the world. They're going to take out a certain percentage of that wire, and that's the money that's going to be raised to be able to pay the tax credit that's on the HIRE Act side. It does have some unanswered questions. It hasn't been finalized yet in the sense of what the U.S. is going to require from the offshore foreign financial institutions and what kind of data that they're going to want us to report. It's another 2 years away from when we actually have to start reporting some of this information that is any U.S. connected file up to the U.S. and to the IRS. So we're still waiting for some final regulations and what they want to get accomplished. But it's going to have an impact on us from a Cayman perspective, on a client standpoint, who we can do business with, and what kind of information sharing that we're going to have to tell the client up front that's going to be required of us back to the U.S.